Welcome, esteemed investors and financial enthusiasts of Wall Street Station channel. Thank you very much for joining our live stream. Today we are delving into a very compelling analysis of Nvidia Corporation. There will be fundamentals, technical sentiment, and macroeconomy that is impacting the outlook of the stock, obviously. So the Nvidia was a trailblazer in the semiconductor industry, and right now we are standing in the precipice of an eagerly awaited earnings report, and we will just study this right away, but we are standing right here just a few hours before this event, so I will do this earnings report in another episode. However, today we are making a preview of it. So the company of Nvidia has been a beacon of innovation and driving advancements in graphics processing units, GPUs, and artificial intelligence recently, and that everything pushed the company to its all-time highs. Right now we are getting to first element of our presentation, and let's embark the journey together. So I'm just inviting you to answer the question, what's next to come for Nvidia? So as a reminder, we are live, so if you have any questions right here, you don't dare to pause it right in the chat, as to let me get back to them as soon as possible. Right at first, let's head on to earnings and a few cents about the Nvidia overall. So Nvidia operates as a technological company specializing in the creation of and production of graphic processing cards, GPUs, tailored for diverse applications across various sectors such as gaming, professional visualization, and so on, so forth. So we can find that the GPUs designed by Nvidia are founded on parallel processing architecture and enabling them to concurrently handle multiple tasks with remarkable efficiency, particularly for computationally demanding processes, and that also standing at the forefront of innovation of AI. Let me just change as always laser point. So we're gonna find that earnings comes out of the data center, gaming, professional visualization, automotive, OEM, and other. So that GPUs are just the one of the the very important leg, but it's not the one of the source of income for the company. So the inside of this GPUs, to end up this subject, one notable component is the Nvidia GPU Cloud, a comprehensive suite that offers software tools, containers, and software development kits. So it helps the users to facilitate the creation and deployment of AI applications in cloud environments. So the primary source, as you can find right here, is for Nvidia arises from the sales of the GPUs, and also there is consulting. That's one thing that I wanted to point out. Consulting will be the one of the AI type of a element, but what I wanted to say about GPUs was that it was constituting approximately 87% of the company's total revenue, and nevertheless the revenue streams of this technology giant are not confined solely to this, as I said, and net profit of 46% is really insane for the company. I think that data center as the main revenue source masks the fact that the risk somewhat is spread. These data centers are in many different businesses with different business cycles, and even though it takes place, I do find that that absolutely shouldn't thwart this coming innovation with new products of Nvidia. So data center is getting more diversified, but right now that's the largest leg in this revenue stream. So Nvidia is putting 20% of its gross profit into R&D and not resting on its laurels, as you can find right here. So there is still research and development going on. But what lies underneath? So let's have a look at the hard data of the company. We can find that revenue along with gross profit and EBITDA has skyrocketed in Q2. So the expectations have literally been jumped out of the roof. Right now, this very large outcome of revenue and gross profit refers to the AI boost on the market. This AI innovation is pushing many of the companies into conversion to this sector more and more. So that serves a stark reminder that there is just kind of a beginning in terms of the overall trend that is right now building up. In terms of free cash flow, that's something that also very important in order to find out what's the condition of the company. So the company is tiptoeing around the one of the best type of in terms of percentage point operating cash flow among the whole industry and overall the whole technological companies in terms of growth sector overall. So it puts the Nvidia on the very steadfast position among its peers, and needless to say, such companies such as Intel or AMD don't have chance to really find the real adaptability to what Nvidia is serving, and right now have a real problems with catching up with Nvidia. So Nvidia is the outstander, but will have some of the elements that may start a real reminder for all the holders. So I will just get back to this in a second, so stay with us. In terms of what's also I wanted to point out is this return of invested capital is and return on capital where versus history right now those investments doesn't really bring much of a profit revelations. But is it a time to grind with your teeth about what's going on underneath? Definitely not. It's a little bit lower than it was in the past, but still the future holds kind of positive outlook, especially in regard to what FCF, free cash flow and return on equity is right now posing. So that everything is tilting at the component more toward optimism. In terms of forecast PE growth rates, that's a little bit alarming for me, that this uptick right now was fueled by this AI emerge, but right now what I wanted to refer to is that this growth will slow down eventually and expectations may lower. So it means that this pace of growth that's right now may not be sustainable. Also, what is holding a pivotal role right here is of the income statements, the elements related to cash dividends paid. So that's a negative right now. I don't know that the company is investing in its development even further. So they are just making the strategic purchases when it comes to the balance sheet right now. But that also giving us a clue that many of the dividend aristocrats will be this investors, the type of investors, won't get really into Nvidia as long as this cash dividends paid are right at the negative to its peers spectra. In terms of reduction of long-term debt, we still have some things to cover, but right now this company is directed into this positive growth, and right now not really looking at those other type of a laggard type of hard data and trying to just flirt with this AI narration overall, so and above everything. So that things that I just mentioned may not lend much of the credence to this to the company, but those are just the small things that I would just improve that may eventually in the long run impede the growth of the company, but right now not really posing much of a risk, as we are just very are dealing with very in some extension overheated this AI narrative boom that is pushing the price forward. When it comes to when they like to compare the Nvidia to its peers, we can find the share price versus fair value is right now having a tendency of being 45.5% of value that may paint a grim picture for overall company. But as we do find right now, even though the fair value might be somewhat around $300, and as long as Nvidia is overtaking its competitors by kind of a some multiplication in terms of PE, we can find that may eventually scores lower on the company overall, but I do find that that is something we shouldn't really take care of now. As we do know, Tesla back in 2020 and 2021 was highly overvalued with PE ratio even higher than Nvidia, and it means that Nvidia may still thrive, even though by any metrics is getting overheated. So right now we may be that might be dissuading institutional and retail investors from acquiring stock, but I do find that eventually what really spiking demand on the stock is that the price itself and not those a particular very sophisticated metrics that may just turn on the red alert for the few of investors, not the most. So those factors in conjunction with the previous one may eventually give a run for some type of a drawdown, but not that's not a dominant narrative that is pushing the price higher. So what will come for Nvidia right now? So during last 10 years, Nvidia stock beat expectations in 35 out of the 40 quarters. So it means that we are right now expecting Nvidia to report the revenue of 16.19 billion for the previous quarter, and EPS is expected to reach 3.36 per share. So it means that even though it's high, it doesn't mean that Nvidia may not show it even higher. So although Nvidia hasn't yet provided guidance beyond quarter three, it seems very likely that Nvidia's top line will keep growing, and it's currently selling every AI chip it can make with a backlog of multiple quarters. So there is a strict demand, even though some of the competition is just turning up on the horizon. Now we can find that this skyline of AI industry is still getting broader, and even though the Microsoft designed Maya chips Maya chips, it's still bringing the things unlikely to be enough to rapidly create internal AI dev and catch up with what Nvidia is right now doing. In terms of the newest updates, Nvidia is to make ARM-based PC chips, and we'll eventually, hopefully, we'll find out a bit more about it right on today's earnings report. And that's kind of a strategic move. Nvidia is expanding its dominance beyond the artificial intelligence computing chips market to challenge Intel's long-standing stronghold in personal computers, and that may eventually bring even more clients to Nvidia. Also, AMD was entering the ARM-based PC chip arena with both Nvidia and AMD potentially launching their offerings by 2025. Right now, AMD is by many of the metrics still a laggard, but with the newest updates, it may also cause a ripple effect on the market, and Nvidia may eventually have its competitors getting a bit closer to its company, but there is nothing right now that's sending a shockwaves as those projections for those companies such as Intel and AMD or Microsoft are still very far with an extending margin. So the success of Nvidia really boils down to this speed of growth and adaptability to ever-changing landscape. So right now, this development bringing a dynamic shift in the PC industry landscape with this ARM-based PC chips, and may eventually increase significance of Nvidia in AI capabilities, and a potential disruption may have a potential disruption effect to long-standing market dynamics. What can we say about the price itself? As we are right now trending low above $500, my projection for Nvidia has right now came true. I did expect that after hitting $500, we'll get down to this 400 once again, and right now let's find out what's next. So we are breaking out of this triangle that has marked a consolidation process, and after breaking of the triangle, we are usually marking an objective out of the pattern for as an extension, and the length between those two boundaries, diagonal and horizontal one. And with that being said, we can find that Nvidia still have a room to grow of around 12.4%. I do expect a little correction before it happens, however, but we had this negation, this attempt to negate before this resistance being hit, and with this negation we are supposedly to move higher. There might be some of the turmoil, some of the jolt right up on the way to high valuation, but still, even though we are very extended, we are right now in Q4, and if we just jump back to our presentation, I will just show you we are right at the sentiment that is almost hitting extreme greed for the broad market. So it means that still there's highest spikes on the Nvidia's stock market may yet to be seen. However, as buying at those valuations that are so extended, and with the RSI metrics hitting over 70, looks unwise, and I would just I'll be setting myself for the pullback. So this pullback should be seen somewhere around 480ish, and this $500 should be cracked imminently, but still I do expect that some longer type of a consolidation should take place, especially that we are right now entering a exponential move that obviously doesn't really end well for those that are joining at the top. So right now, those investors that are jumping right at the bandwagon right at this point are thrown in at the deep end, and I would find that this kind of a market structure will snarl up for them somehow in their portfolios. Right now we are jumping to next element, that's a macro. As we don't know, we need to analyze macro in order to find out in which cycle, in which environment we are right now sitting at, if in terms of trading or sometimes even in investing, if you are just finding some of the euphoric moments or depressive moments on the market. You are just trying to rebalance your portfolio in some terms. So in terms of macro, there are many voices that soft landing is kind of obvious. The conference board declined, however, in October for the 19th consecutive month, and this kind of a very long streak was only exceeded in the 2008 recession period and 1974 recession as well. So the conference board marks a recession trigger when the growth rate of lei falls below minus 4.5%. Right now, there is a typical resilience of the economy during the initial phases of monetary tightening that right now leading investors to disregard the lagging effects of Fed policy, but it may eventually come true. So you need to be ready for this and just keep some of your cash on the sidelines if you want to maintain and go through this period that is coming up. But in terms of the fourth quarter, we are still in this Santa Claus rally, and as long as it happens, we shouldn't have our party get spoiled. So this kind of a recessive tendency may be observed somewhere in the second half of 2024, I do expect, or maybe in the beginning of 25, but still we have the worst yet to go through, possibly. In terms of options chain, let's find out where this max pain is in order to find out how to position ourselves. So with this expiration date of 24th of November, we can find that the highest open interest on puts are sitting right at the 490. Whereas for calls, we can find that the highest one sitting at $500. So it means there is a maximum point being turned on after getting below 490-ish, and I do expect that this level shouldn't be tested out before marking up. But still, there's no denying that you need to be very cautious, and the volatility on the event of earnings report is highly expected. So the majority of the market is betting Nvidia to go above 500, but still this 490 and 500 range should be somewhat be tested in the hours to come after market open on Wednesday, hopefully. So I don't know that hopes right now were dashed for bears that are betting for the larger crash of Nvidia, but that's kind of a reality, and you cannot really bet against the crowd that is so amassed. So I want to highlight the thing that Nvidia should be traded higher, but still there are some risks to consider, and buying at current valuation after so overextended market is kind of unwise. When it comes to final thoughts and Q&A, if you have any questions right here, that's the time for you. Anyway, we are just going through. So when it comes to wrapping up, so we've heard recently about OpenAI problems that might be a catalyst for Nvidia to build its AI model that they are working on, and also, even though there are many of the naysayers telling that Nvidia's time is coming over, and just the things related to the price itself of Nvidia are posing many risks. I do find that as it managed to stay steady throughout this 2022 period, it was kind of difficult for Nvidia. Right now, the 2023 was very hectic for this, and 2024 looks like the extension of the previous year. So Nvidia should have a extended rally and has a chance to catch up with market cap, even Apple. So Wall Street right now is pricing the Nvidia to beat the expectations on earnings, but still, will it be enough to justify its valuation? It's highly doubtful. So I do find there are still problems with bigger hit from sanctions on China, also dropping enterprise spend and orders, and supply shocks. And even though Nvidia is letting out on the market a new type of a product, and is kind of a leader in terms of AI chips, we still have a macroeconomy headwinds supposedly ahead of us. So it means that even though this substantial I would say the predominance in AI chips take place for Nvidia, we still finding that Nvidia stock might be kind of overvalued in the long run, and I do expect that these difficulties along the macroeconomy may eventually weigh negatively on its market cap. So Nvidia is in the short and medium term time horizon supposedly more poised to grow, but in 2024, as we have just reminded, the more and bigger turmoil is about to become a reality. But let me know in the comment section below the video what you think about Nvidia stock right now, and whether you're buying even though some turmoil may occur. So thank you very much for sticking around, and have a great day. We are seeing each other not on Wednesday but on Thursday. We are making a 1 day off. So